It's about that time of day again here, isn't it, folks? Back in the action. Hope you guys had a great weekend. Feels good to be back, though. Got a lot of work to cover here tonight. Got a lot to talk about in tonight's video. It's Monday evening, after all. It's October the 28th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, be aware I help traders find high-quality setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. I have a very important job tonight. My job tonight is to help you guys and gals find the best levels of support and resistance to get the best entries and exits for tomorrow, and most importantly, how to avoid some easy traps in tomorrow. That's Tuesday's trading session. And we're going to cover a lot tonight. We've got a lot to talk about on the calendar. We got some FOMC, some earnings, some jobs right later on this week. We'll grab the calendar. We'll talk about the schedule here this last full week of the month. And then, of course, we'll grab some charts. Got a lot to cover tonight on the charts. We've got some oil, some S&P, some Nasdaq, and, of course, we'll wrap up tonight on that yellow metal, that mighty gold futures. I'm going to jump in here first tonight, though, on the oil, on the black gold. Oil, as you know, went up last week and came right back down. It's a bear market on oil, but I think there just might be a short covering rally in our future here on the crude. Let's grab the oil chart. Let's talk about this oil here tonight, that black gold, those crude oil futures. Now, what do we know about oil here right now? We know that oil is obviously a bear market. We saw the bulls go up. They give the high a day little kiss there and then came right back down again. So a very, very strong move down here for the bears. We know the bears have control of this market. Anytime I know the bears have control, I'm looking for levels of resistance. And some levels of resistance are pretty easy to find, actually. I found a hidden channel right off of these lows. That looks like a great spot. I've got my trading range. I'm going to find some levels of resistance. That's a great spot. So I've got a couple levels here right lined up on top of each other around that 5610 to 5620 area, and I'm really looking for probably one of three different entry setups to sell up around that 56 and change. And of course, tonight on the video tonight, we'll talk about how I want to sell this market going lower on that pullback. But as I mentioned before, I think there might be some clues, right? And we'll talk about this in more detail tonight. I think there might be some clues from back here last week that might just suggest a retest of the high might be in our future at some point tomorrow. I'm going to talk about some buy patterns underneath the range we can be buying, or how can we trust a reversal? What's a reversal look like, and how can we get in on a reversal? Because, as of right now, I can't just guess and be a buyer on this market. We're bearish. I want to be a seller. I got some great setups to talk about tonight in the video. And of course, also too, I'm going to keep my eyes open for the chance to be a buyer tomorrow. And we're going to talk about all the details tonight on this video. Over on the S&P is pretty much the exact opposite. A very bull market here this evening on the S&P. One big leg up, two big legs up. But look what happened. Something's wrong, right? They missed that measured move. Something must be dragging this market back here as they push through new all-time highs. Looks to me like a bull market into a trading range. That tells me buyers must be getting a little bit weary of buying this high right now, and that tells me I'd be much better off looking to buy this market at a much lower price. We know we're bullish. I'm trying to find some levels of support. I've got my expanding trend line. I've got my reversal line. I've also got my range levels underneath as well. All signs right now point to buyers waiting down around that 25, 30, 26 and change area. And just like on oil, I've got three, maybe four. We'll talk about it in more detail tonight. Maybe three, maybe four patterns to set up there on that pullback. We'll also talk about what to do if this market keeps pushing higher, because as you can see, we didn't get the measured move yet. We got some resistance here overhead. These are all-time highs. Going to be a little bit prickly as we try to go higher. And we'll talk about the mindset of trading all-time highs in tonight's video. And of course, I'd be lying to you if I said I wasn't also open for a short, right? If any cracks start to show in the foundation, this market will easily go back to fill that weekend gap and go back to that big round number at 3,000. We'll talk about what those cracks might look like and how we can anticipate a short here on the S&P for tomorrow. And then, of course, how about that Nasdaq? Do you see that Nasdaq? Nasdaq getting closer to its all-time highs. Man, oh man, what a bull, what a run the bulls have had, right? We know we're bullish here on the Nasdaq, no doubt about that. Strong move up, pullback, strong move up, no measured move. Even that small little guy right there, no measured move. So, what does that tell us? We know we're bullish, but it looks like these buyers are growing weary up here. For good reason. There's been almost zero pullbacks in the big picture over the last couple days. So we know the market's bullish. We know we want to be a buyer right now, right? We know the market's bullish. We know we want to be a buyer. It looks like we've got some hidden channels here to work with. I love this hidden channel. That would be a great spot to be a buyer. How about this reversal line? That's going to be a great spot to be a buyer, right? We also of course have that, right, that pullback to that low combination. So combine those two areas here. I really like that pullback here on the Nasdaq. I think the hardest part right now is we just simply don't know what we're going to get in the short term. It looks like they're going sideways here. So I definitely want to be prepared for what if we get a range. We'll talk about that tonight on the video. But make no mistake about it, I want to buy low here on the NQ. Everyone's waiting for that pullback. We'll talk about my favorite entry patterns here to buy that pullback. We'll also talk about what that reversal might look like to go back to that big round number at 8,000 for tomorrow. So make sure you stay tuned for more on this. If you're a Nasdaq trader, you don't want to miss the chart review here and the plan for tomorrow. Last but not least here is over on the gold. Gold is what we call a spike and range. Big old move down, big move down on the gold, right into that choppy, flat, balanced, range-bound market here this evening. We know the market's bearish. What does a bear market tell us to do? It tells us to sell at resistance. I've got my hidden channel level marked up. That'll be a great area of resistance. I've got this expanding triangle, you'll notice, right? That's going to be a great level of resistance. Oh, one more. I've got my range and the range expansion levels. Those are going to be great levels of resistance. Pretty simple to see. We know we're bearish. We don't want to sell where we are right now. We don't want to sell right into that measured move, right? Because that hasn't been working out very well for those bears. We want to sell high. I've got 3 different types of patterns we're looking for here as we try to sell off that high. But I'll tell you, right, easy come, easy go, sharp move down into a range. We get a lot of news coming here tomorrow morning. We'll talk about that here in a moment. Could this thing reverse? What would a reversal look like? How do I buy it as it's running higher? Can I buy it as it goes lower? We'll talk about all those details, give you some good patterns to look for so you can have a great day right along with us tomorrow morning in the trade room. So now we've got everything ready to go here. We got some gold, some Nasdaq, the S&P, and of course that crude. Lots of ranges, lots of big potential for some pullbacks tomorrow. Before we jump into the video tonight though, before we break all this down into bite-sized pieces, I just want to remind you to join our mailing list. I want to encourage you to join our mailing list because I want to make sure that you get that email every evening when our nightly newsletter goes live. Right before I publish the video, I send an email to everybody on our mailing list. I want to make sure you get that email. All I need is your first name, right, or your name, your email address, and then hit that subscribe now button. And don't forget, when you subscribe to join the mailing list, your job isn't over yet. You still need to go in, check your email inbox, because I'm going to send you a welcome email, and inside that welcome email has a bunch of great free resources and also that verification link. So make sure when you join our mailing list, check your email inbox. Look for the verification link inside of that welcome email. Make sure you verify your inbox, and that way I can keep sending you emails every evening when our nightly newsletter goes live. And a heads up, guys, sometimes that welcome email gets stuck in your spam filter. So if you don't see the welcome email, check your spam folder and then make sure you whitelist us, right? So that way you don't have any problems like that in the future. All right, we are looking good. Now, don't forget, if you have any questions tonight, any questions, comments, concerns, feedback, what questions can I help answer? If you have any questions, drop those questions in the comment section below. If you have any feedback, do you hate my corny trading jokes, right? Do you love one part of this newsletter? Would you like me to remove one part? What do you love? What do you hate? Drop me some feedback in the comment section. I'm always trying to make this the very best place to learn and earn on this video newsletter. So drop me some honest feedback, some constructive criticism. I promise I got very thick skin. I want to get better on this video every evening, and I rely on you guys to give me your feedback. So drop that feedback in the comment section below. And then while you're down there typing those questions in, give me a thumbs up on the video tonight, will you? Help me out real quick. Hit that thumbs up button here tonight on the YouTube video, because believe it or not, every time you guys hit that thumbs up button, YouTube helps to reward me by exposing this video to more traders who have never learned this trading strategy. I can't even imagine not knowing this simple 3-step strategy that we use every day in our trade room. I want to make sure to share this with as many people as possible. So definitely type those questions in. Hit that thumbs up button. Help us share this video with more great people out there. And don't forget, if you have any questions, I'm always here on the telephone. I know. I'm old school. I actually talk on the telephone. I know everybody tells me I should have some chat bots and some widgets and some automated systems, and those things don't work as well. I like to answer the phone, talk to you guys, right? So call that toll-free phone number. What questions do you want to have answered? Best brokers, best data, or maybe you want to get access to our free trading classes or our trade room on a free pass. Call that toll-free phone number if you have any questions that are not answered in the video, or if you wanted to say hello. I'm always here, looking forward to speaking with you guys and gals. In the meantime, let's get some work done tonight, shall we? We got a big day coming tomorrow. Let's take a look at the calendar here to kickstart this evening's nightly newsletter. Now, of course, we are going into the last couple days of the month. We've got the last couple drops, right? Tuesday, Wednesday, Thursday are the end of the month of October. Now, anytime we have the end of the month, what do we know? Volatility, right? At the end of the month, traders are human beings. And towards the end of the month, just like the end of the day, end of the week, end of the month, end of the quarter, end of the year, anytime we start seeing the end of the day, week, month, quarter, we always know traders are going to be taking bigger risks. You know, some traders are up on the month and they're being all loose with their rules. Other traders are underwater for the month and they're desperately trying to get back to square one, right? Back to break even for their clients' accounts. So you will see more risk on, as they say, as we go into the end of this month. Now, as we get towards as we get closer to the beginning of the month, what happens on the beginning of the month? Jobs, right? That jobs report. The first Friday of every 1 month is the employment number. So as we get closer to the end of the week, everybody starts to shift their focus onto what is the employment number going to be? What do the markets look like as they anticipate that number? I'm not going to worry about that too much tonight because, as you can see, that's pretty much a lifetime away right now. We're not going to worry too much about that because we got something else to worry about in the meantime, and that is the FOMC meeting announcement on Wednesday. Now, that meeting will begin tomorrow, as you can see here. That meeting will begin tomorrow. However, probably not going to affect us too much tomorrow. But on Wednesday, we've got that FOMC announcement, which means probably going to be a full day of trading tomorrow. And then we'll have to adjust our strategy ever so slightly, right, on Wednesday. And of course, we'll talk about the plan in tomorrow night's newsletter, right? When I see you guys on Tuesday evening, we'll talk more about the plan for Wednesday's trading session. Sound like a plan? Okay, perfect. So we've got, again, end of the month, higher volatility, right? More risk-tolerant traders out there. We've got the employment number, the jobs report on Friday morning at 8:30. That really is the big news, right, of the week. Well, that is, unless you ask the FOMC panel, right? They're going to probably cut rates on Wednesday, and everybody's going to be paying attention to that. So we'll talk more about that in tomorrow night's newsletter, right? But what about tomorrow, right? Do we have any major news tomorrow? We really don't. We don't have a lot of news on the schedule tomorrow. You'll notice we got some home prices, some confidence numbers, and some pending home sales number. As you can see, these are all stacked up around that 10 o'clock hour. So without any major news on the schedule tomorrow, I would imagine look for the best setups happening between that 9:45 to 11 o'clock block, because we have a lot of the smaller news numbers piled up there tomorrow at 10 o'clock Eastern time. So no major news tomorrow, right? No major news tomorrow. However, though, right, make sure you take advantage of that open space tomorrow, because we come back on Wednesday for the Fed announcement, right? And again, Friday being that big news report. Now, as you also know, right, Thursday is Halloween. Kind of interesting. We're going to have, obviously, Halloween on Thursday this year. So Friday might be, yeah, I mean, it's tough to tell how that will impact on Friday. I don't expect that to have too much of an impact. You know, sometimes Halloween is on a Friday, and sometimes that Friday is kind of a waste of a day. But I don't think you're going to have that big of an impact on this, because you've got that employment number, which is a must-trade event for a lot of traders on Friday morning. So probably want to get in early on Halloween, right? Get to your desk early on Friday to finish up the week. Is there anything else going on here, right? We talked about jobs, Halloween, the Fed, right, on Wednesday. Oh, earnings. Last week of earnings season. Well, if you don't count the end of the year, right? We got earnings here. Remember, before the open, after the close. So you've got markets like the S&P 500 and the Nasdaq, which will definitely be impacted by these earnings. So if you're in Asia, if you're in London, or if you're a night owl here in the US, you'd like to trade overnight, be aware. Make sure you're aware there are going to be some earnings reports coming out that can, right, nothing guaranteed, but have the potential to really move these markets around in the overnight session. So be aware of that. We're seeing a lot of big moves in the overnight right now because of these earnings reports. And so we'll definitely be keeping our eyes and ears open in the overnight session as well. But of course, we'll get together every morning, 8 o'clock Eastern time in our trade room, and we're going to execute this strategy together. No major news for tomorrow. We'll take advantage of kind of the calm before the storm tomorrow morning, and then, of course, we'll go into Wednesday, Thursday, and Friday as we batten down the hatches into the Fed, into the end of the month, and, of course, into that jobs report. Tomorrow night's newsletter, we'll dig into more about how we're going to trade that report on Wednesday, Thursday, and Friday. In the meantime, let's get this party rolling here. I want to make sure we knew exactly what the schedule here looks like for the rest of the week. Now, I get some oil, some S&P, some Nasdaq, and some gold. Let's grab that oil here first tonight, because as you can see, oil's pretty easy. Strong move down into a trading range, higher lows, lower highs. I've got this marked up as a little rectangle here. We know we're bearish, so we definitely want to be a seller. Where's the best place to be a seller? At levels of resistance. Mark up my lows, find my high. That's a great spot overhead. I've got my range level here, right? Take the trading range, use that range to find my levels of resistance. Up overhead as well. I've also got this reversal line area overhead, although I'm not sure if we'll get that far of the pullback. But as you can see, there is one area on this chart that just keeps showing up, and that is this 56.15 area as we go higher. So here are a couple patterns I'm looking for to be a seller on this, right? And of course, if we can get that, right, that pullback, I know where this market is trying to go, right? Got that measured move I'm looking for as that final objective there. We don't exactly know how far we'll go at this point. We'll want to get that measured move, though, right, as our final objective. The bottom line is we know we're bearish. I want to be a seller. My goal is to sell up at resistance. And so what I'm going to do is I'm going to wait for a pullback. I don't want to sell into this area of support. You can easily see we got double bottoms here, where I get that prior low. If I zoom out, bit further there, right? That prior low from last week. Doing a good job at holding back these sellers right now. So what does a short look like here for us? Well, I'd like to see us get up off of this low, up around the top of that hidden channel, and then I'll start looking for that buyer failure. It's a bear market, but if we get above that, right, if we go back above this range right now, we're going to probably see some buyers come in and try to buy that pullback. You know what I mean? Just like those sellers tried to come in and sell that pullback off the moving average and it snapped back higher here. What I like to do is get this market up above this trading range, up inside this sell zone here, and then simply wait for these buyers to try to take a reversal. You know, wait for them to try to send this market in the opposite direction. Because once we see those buyers commit to buying that pullback off the moving average, now I know exactly where their stops are. I know exactly where their pain points are. You know what I mean? Right? This is where you want to be selling. That'll give us a great spot here right now to be able to sell high, sell at resistance, and do it in a way that we're able to really trap in the counter trend buyers and then sell right into their stop losses. So that is definitely one scenario that I'm watching here for tomorrow. Another scenario would be talking about that larger resistance level up at 29. If we were to see a real strong pop, you know, as we go higher, now that momentum is going to be a lot stronger. And so before I can try to sell it, I want to let those buyers now, imagine now the moving average will come over here. I want the buyers now to try twice. One try on the pullback, two try on the pullback, and then I can be a seller from there. This is a slight variation of that previous pattern. And how would you know that you wanted to use that variation? It's a lot stronger move. Right? If I get a little shallow pullback here, the buyers are not going to be that strong. And so what I'll do is I'll look to sell into those stop losses of those buyers. But if we run a little bit higher, you know, really jump higher here, now that momentum's not going to be as easy to get those buyers to quit. They'll try once, they'll pull back, try twice. We call it a nested failure pattern, right? So we go up, we run into some key levels of resistance. It's a real strong move in this example. The buyers will try once in the pullback, they try twice on that pullback, right? And then of course we sell into those stop losses back down into that trading range. Now we might get lucky on this and we might get a shot to get a combination pattern, which would be a failure into a pullback combination. Okay, this is a little bit more advanced tactic, okay, but it basically is a failure pattern, right? The buyers try a couple times, we sell into their stop losses, and we can also sell on that pullback. The key though is we just don't want to sell down here. Okay, that's the key. So get it up, buyer failure, sell it back down. Get it up, buyers try once, try twice, and then sell it back down. And again, we may get lucky and get high enough to get that failure into pullback we call a combination setup. It's a nested failure into that pullback pattern, back down into that trading range. Now, those are the sells if we go higher. What if the market runs lower? Where's the market trying to go as it runs lower though, right? Here's the big question. I would imagine if this market makes a run lower and it doesn't pull back here for us, where's it trying to go? It's probably trying to go back into this big range we had back around 54. Okay, so this thing makes a run for it. It's trying to go back to that 54 area with that 55 level being an easy target. But how do we sell it? It's already very low. We're clearly getting rejected down here. What would be an easy way for me to be a seller? There are really two patterns I would look for here to be a seller as we go lower. The first one's the 1, 2, 3 breakout. The 1, 2, 3 breakdown. Strong move down, pull back to the moving average. And remember, at this point, you don't know if that will go down and then head fake right back in. So you can't just sell that pullback. Wait for them to hold that pullback off those lows, and then we'll know the bears have it and they're looking for more. They're trying to go down at 55. Mark that new low now. mark that high, and then now we have our new channel and we're selling off the top of that channel. Does that make sense? Again, we can already see they're balanced here. So if we get that strong move down, it could come right back up again into that trading range. I'm going to talk about a pattern to buy that here in 2 seconds, right? But most important thing though is that if we do make a run lower, don't try to jump into it as it goes. Wait for it. And again, it'll probably pull back somewhere right around that 55-60 area. It'll either run back into the range or it'll run lower. Once you get the move going lower now we know the bears have it. Mark that new low, draw that trend line, bring it up to that top, and now you've got that hidden channel. And now you can be a seller on the way down to, again, 55 is an easy level. 54 would be even better. We'll see how much we can get. Another good pattern here would be a strong breakdown. Okay, that's the key here, strong breakdown. Now, 1 pullback, lower low, 2 pullback, trap high, and go. I call this a 2-try breakout pattern. 2-try breakout pattern. First rule is strong move down. The second thing, you want to see these buyers try once, try twice. Third, trap high, sell that sucker. A great, great setup. The most important factor in this, though, is you got to have strength on that first leg down. It's got to be very, very strong going lower. There's got to be that fear of missing out, right? That's why you'll oftentimes hear me call this the FOMO breakout pattern. I'm not a big believer in trading breakouts, but once I see a strong move down, 1 try for the buyers, 2 tries to go back where it came from, now I know I can rely on that trap high. And again, where's my target? 55, or if we get lucky, 54 on the move back down. Now, I mentioned this earlier. What could a short covering rally look like? Why do I think there might be some buying opportunities tomorrow? Well, it has a lot to do with, if you look left, you'll notice this is really nothing more than a spike in channel. We had that spike up, pull back, spike up, pull back, right? What does that look like? That's a big old bull channel. Where are we? We're near the low of that channel and looking to go back up to retest those highs. Now, as I mentioned earlier, I don't think you're safe to be a buyer here right now. This market is convincingly bearish, right? It's very difficult to want to be a buyer on this. There are 2 buy patterns, though, that I will definitely be looking for here tomorrow. One of them is a reversal, a 1, 2, 3 reversal. Now this is just like a 1, 2, 3 breakout. 1, strong move up. 2, pull back to the moving average. And 3, most important, strong move off the moving average. Once you have that reversal now, mark up that high, mark up a trend line, find that hidden channel, and we're buying the low of that hidden channel. That's the reversal I want. It's called a 1, 2, 3 reversal. Now remember, you can't just buy that first pullback. If you get that strong move up, remember, guys like me and maybe people like you are going to be looking for that failure, right? That failure to sell back down again. So don't get too aggressive trying to buy that pullback, right? Wait for it to hold. Once it holds, then you know you can trust it. Mark up the high, mark up that low. Let's buy that low, right? Buy that low. That's the sweet spot. Where's your target? Yeah, easy target. Back up to retest today's highs, just shy of $56 or $57 a barrel. How about if we go lower? How do you buy a really bear market? Very carefully. I like to use a simple pattern called a crown reversal. And it looks like this. I want to see a strong move down. Well, not that strong, right? But I want to see a move underneath this range. I want to see sellers try to sell a pullback and fail to retest the low. I then want to see a higher high, see sellers try a second time. Okay, we use what we call the 2-try rule in our trade room. The markets are filled with 1 try, 2 try, 1 try, 2 try. At this point now, we've got the strong move down. The bears have now tried once to keep it going. I'm going to look for them to try a second time to keep it going. And now I look for, at the very least, a double bottom, right? Ideally, a trap low. It's called a crown reversal pattern. And you'll notice there's a lot of similarities to these patterns, other patterns we've talked about already. This, of course, is a little bit different. In this case, we get that strong move down, but the bears try twice. Again, higher highs here, guys and gals. Higher highs there. But bears try once, bears try twice. Trap low, and we're buying it now right back up as we go. Don't forget, these will usually produce a pretty easy pendulum swing. Right? Pendulum swing. The amount of the move underneath is the amount of the move above. And then obviously keep an eye out here for a 1, 2, 3. Mark up. And again, we're buying the low of that hidden channel. Now, everything I've talked about here today, all these setup patterns, all the rules, most of them are covered in that free trading class I always link up in the upper right-hand corner. So here's what I recommend. If you're here for the first time today, or maybe you've been watching before, but you haven't taken this course yet, make sure you grab that free trading class. It's linked up in the upper right-hand corner for you. Nice and easy to register. It's free. It's a great resource for you, especially if you're a new trader and you want a good, solid strategy to build your foundation on. I'll teach you my 3-step strategy. I'll show you how to use our 4 favorite entry setups, and I'll also send you hundreds of examples of how we use that strategy on our favorite futures markets. So definitely don't delay. Grab that link in the upper right-hand corner. I'll also put a big red button for you tonight if you're on the trading blog at Sideways Markets. So check out that big red button. It's right below the video tonight on the trading blog. Let's keep going. Oil, I think we've squeezed everything out of that oil chart we can get. How about some S&P? S&P, as you can see right now, is quite bullish, but we're running into a problem. We had 1 leg up, 2 legs up, and apparently something stopped them in their tracks because they came close, but they were unable to reach that measured move. That must tell us something's going on, right? I mean, obviously, that big of a move up, why didn't they get that measured move? Probably because buyers are a little bit weary of buying this high right now, right? I mean, last Friday, we had that big run up. Really didn't get much of a pullback at all today. Another big run up as well. Buyers are obviously involved, but it looks like they're starting to run a little bit short on buyers at these highs. So we know we're bullish. I want to be a buyer at levels of support. Where can I find a level of support right now? Well, there's a trend line here, and that trend line might just be our best friend here for tomorrow. So keep an eye on that trend line. I've got my trading range, and remember, I can take that trading range and I can use that to find my buy zones and my sell zones for that matter. Okay, and I've also got that prior level of support, right? What was resistance can now be used as a level of support, right? What was resistance can also be used as support. So this whole area becomes a really nice spot to be a buyer. I want to, of course, avoid the middle of this range. Range-bound markets always tell us what? Buy low, sell high, and avoid the middle. And so really it all comes down to, we know we're bullish right now. We know the market, right? People want to buy at levels of support here. Let's find level of support. I like this area right down here. Now, obviously, we got to get underneath that range to get there. And when we do, I'm hoping we get that moving average coming down, get those sellers to try to sell off the moving average, and then I'm going to look for that failure into pullback combination. Okay, got a nice open space down here, looking for that failure into that pullback combination. So again, imagine now we get that pullback down into my buy zone here. The moving average comes over. What happens? The sellers try to sell that pullback. Once we see them commit, now we know where their stop losses are. Now we know where their pain point is, and now we can exploit that. The market's bullish. It's not bearish. And so if I can get those bears to take that trade short, I'll look for that failure. And then again, don't forget those failure patterns. I would say probably 70% of the time, they're going to pull back to that moving average and give you that failure into pullback combination. Now, what if it really sinks though, right? What if it really sinks? What if it really gets knocked down here? Okay, not a bear market yet, because a bear market has to what? Has to hold the pullback first. What if it really gets knocked down here? You know, maybe it's going back to that 30.26 area. If it really gets knocked down, then what do we do, guys? Then we look for that nested, don't we, right? Because now that momentum's a lot stronger. So now it's going to be one try for the bears, two try for the bears, and then we can start getting serious about being a seller going back up. And again, how do you know the difference here? One of them is a relatively shallow pullback, right? A shallow pullback, you're not going to have a lot of bears involved at that point. It'll be the rookie sellers and profit taking from the buyers. We can buy pretty aggressively into those failure patterns underneath the moving average. But if this thing really cooks, really runs lower, now those bears aren't going to give up without a little bit more of a fight. And so because bears want to sell high, we wait for one try, we wait for two tries, and we buy up from there. Okay, it's all about what? It's all about momentum. We want to be a buyer, but we want to buy off support. So which level of support will they use? The level of support they use will directly determine which entry pattern I want to be using. And again, I'm just simply drawing on this screen right now. I've got a lot better examples, right? Real charts to look at as part of that free trading class that I've linked up in the upper right-hand corner, or that big red button right below us. Now, as we go higher here, how do I buy this as we go higher? It's going to be, again, remember, don't forget, we get the measured move overhead. These are all-time highs right now. So how do we buy this going higher? I want one of two patterns, right? One pattern would be a 1, 2, 3 breakout. Okay, strong move up, pull back to the moving average, jump off the moving average. When that happens, mark the high, mark the high, mark the low. 1, 2, 3 breakout into a hidden channel pullback. 1, 2, 3 breakout into hidden channel pullback. 1, 2, 3 breakout into a hidden channel. You got it. Buying that pullback. Okay. Now at that point, where's my next objective at that point? If that is the pullback we're getting, now the objective will be literally that next measured leg. So the next objective, if we don't pull back, the next objective now becomes up around that, about 30.61. Okay, that of course is if we don't pull back below that current low. Probably not going to happen, but hey, you got to make sure you're ready for everything. What's the second pattern to be a buyer here? Second pattern is that two-try breakout, or as I call it, the FOMO breakout. That strong move up, that gets the FOMO going. One try for the bears, higher high. Two try for the bears, trap low, and that buy from there. Again, as we go higher here, what's going to happen? The buyers will take some profit and the market will pull back. Then sellers will try to short this thing off the highs. Okay, remember, higher highs, then trap low. Remember, that trap low, that's the key. That trap low allows you to buy nice and low, and really what you're doing is you're buying right as all those sellers are trying to short this thing back into that range. And once you get that nice strong green candle, all of those sellers know they're trapped. A lot of them will exit their positions right on a strong green candle, or many of them will probably flip their positions, right, and go from being short to long. In other words, you'll trap in those sellers, and really the only way to get out is to be a buyer, and the market will take off going higher from there. So those are ultimately four different buy patterns. Again, it's that shallow failure into pullback. It's that deep nested. It's that 1, 2, 3 breakout into hidden channel pullback, or that FOMO breakout. All right. How about a sell? How do you sell it as it goes higher? Crown reversal. We go up. Buyers try once, buyers try twice, trap high, and we sell back down. We call it a crown reversal, right? We talked about this on oil. We go up. We don't want to buy high up here, but we also can't be a seller. It's just too bullish. So what do? We wait for the buyers to try again. They fail, they pull back. Okay, that's the key. Once you see that lower high, now you know, mark up that swing. Mark that one up. Get ready now for that second try. Buyers will try once to keep it going. They'll try twice to keep it going. If they can't, watch out below. We'll sell that thing with again, it's called a crown reversal pattern. One try, two try, short that sucker, back down in. What else can we sell? Can we sell a breakdown? Yes. 1, 2, 3 breakdown. Remember, you got to be strong though. Right? It's got to show strength. Strong move down, jump off that moving average. Once you get it, mark up those lows, mark up those lows, mark up that high, and you know where they're trying to go. They're trying to go back down to fill that gap, that weekend gap. Okay, trying to fill that weekend gap, or they're trying to go all the way back down. And look at this. Much like on oil, there's a big old range down there, down around, conveniently, that big round number at 3,000. So sellers would love to get back to fill that gap. Rest of the bears want to get back down to that big round number at 3,000. Now, real quick about the gap. Okay, a lot of people probably wondering, doesn't that gap want to get closed? Do not make that mistake right now in trying to sell this market just because there's a gap down there. Gaps will become magnets once the market turns bearish. Okay, they will become an objective, as we say, once the market turns bearish, but we're not there yet. So please don't make that rookie mistake that I know a lot of us make. I made it when I was a rookie too. Just because there's a gap in the chart doesn't mean we should not be buying this market. Okay, what is a gap really? A gap is a big, in this case, a big green candle. That's all it is. Okay, it's a lot of excitement for those buyers, and they clearly continued it. So don't let that gap be your only reason why you should be selling this market. I don't want to hear this, well, I thought it went too high, and, well, you know, it missed the measured move, and then, of course, the gap, so I thought, okay, they try to, no. You're thinking way too much. You see what happens there? It's easy to overthink this right now. Okay, what is the market telling you? It's bullish, and it's range-bound. It's bullish, and it's range-bound. We're bullish, get underneath that range and buy it right back up. If it holds and runs, okay, now let's get short, right? If it holds and runs, now let's get short. Now we can use that gap. And again, don't forget, tomorrow morning and every morning, Monday through Friday, 8 o'clock Eastern time, we're going to do all of this together in our trade room. Let's keep going. How about some Nasdaq? I think the Nasdaq is overall probably the hardest market for tomorrow's trading session. One of them is technical, because you'll notice there's not a lot that we can work with on this chart right now. There's not a lot here. We know the market's bullish, and that's about it. We know it's bullish. There's a gap on there. There's a reversal line at 64 3/4, but that's about it. We don't know a lot about this. Unfortunately, we just don't know a lot about this market right now, besides the fact that it's bullish. The other reason is, again, we got earnings, right? Lots of earnings coming out here overnight and the pre-market as well, and that may shake things up here overnight. So, you know, honestly, hopefully the next couple hours we'll get some more candlesticks. We can kind of confirm on this. What looks like here's what we know. We know right now the market is bullish. We know there's a gap, right? And again, that gap may come into play tomorrow. It may not, though. Okay, do not be surprised. The last couple times we've seen a weekend gap, that weekend gap has not been filled until the end of that week. So don't hold your breath on getting that weekend gap filled. We know we're bullish. We want to be a buyer. Buying where? Buying at support. I'm going to mark up those highs. I'm looking for a level of support, right? I'm going to bring it down to that low. Okay, I'm a little bit making an educated guess on this, because you can see that midline right there. The midline just fits like a glove. So, you know, traders are human beings. Human beings are very resourceful. They're going to use whatever they can get their hands on. I like the idea of using that hidden channel as a level of key support. What I also like is how the market went up, pulled back, and then ran up from there. That is a nice level there as well. You know what I mean? Off of that level of support. So that's a great area to be using as well. So I like that whole area there. That 80-65 area really is attractive. Now, what I don't know here yet is, will this become a range? Because if this becomes a range, we have to kind of adjust our stuff a little bit. Again, 1, 2, up to a measured move. Make sure I go back here real quick so you see where that came from, right? 1, 2. Just like the S&P, they failed to reach that measured. We just want to make sure I point that out for you so you know that we do have that measured move still waiting overhead. This feels like a range. I'm not sure what happened here. I'm not going to go into too much detail on that. It's not really relevant. It doesn't really matter why. The why doesn't matter. All that matters is we got a pullback, and it looks like we're going to go into a range of some sorts here. At least it does, right? It looks like, some sort of range here of some, I don't know. You know what I mean? Maybe it's right there. Maybe that's the range. So hopefully the next couple hours, hopefully we'll see more information about this being a range because, honestly, I hope we get a range. If we can get a range right here, I can take that trading range and I can find my levels of support down here. Now, we already know where we have those levels already. We know where those levels are, but it'd be nice to know. It'd be nice to kind of be able to wrap my arms around, okay, I got my range. Once I find my range, I can use that range to find some levels of support down here, and I can be a buyer. So let's think about a couple scenarios here that might come into play here. One of them would be if this market keeps on pulling back, right? Keeps on pulling back. If it keeps on pulling back here for me right now, I'm going to draw a trend line down overhead and try to use that trend line now as a key level of support. Okay, we call these two-legged pullbacks, 2LP for short. Two-legged pullback patterns. Make sense? It's called a two-legged pullback because of the one leg and two leg. So if we just keep, right, if we make another leg lower here, I'm going to draw that trend line over and try to use that trend line as a key level of support. Now, that isn't always an option. Sometimes we get that pullback, and the market kind of goes sideways for a little bit down here, so we don't really get a chance to use that trend line. So if we don't get a chance to use the trend line, the next best thing would be a failure pattern. And this is where things might get pretty good. Because as that moving average comes over now, I can now look for those sellers to sell off the moving average. Now I know where their stops are. And again, we're assuming there's no range here in this example. Now I can be a buyer into stops. I can be a buyer off the moving average and got plenty of space up here. I could look for a trap low to put a cherry on top. Here are 3 patterns, right? Failure pattern, pullback pattern, trap low pattern. Okay, those are 3 incredibly reliable setups if we can get that, again, that pullback. Okay, that's no range confirmed overnight. It's a failure off the moving average for the sellers. It's a pullback for the buyers. And then as you go back to retest the high, it's that trap low. Okay, and again, I want to remind you, all of these patterns, you can see a lot more, hundreds of examples of these patterns by grabbing that free course in the upper right-hand corner. Now, what if we go sideways though? And again, I'm really making an educated guess on this of where that range is, but it looks like this might be where the range ends up. If we get a range, the key is going to be, 1, is making sure we know where our buy zone is down here. Right? Remember, the size of the range will determine where I want to be a buyer. We know we've got some levels down here, but I'd like to know where those buy zones are. Once we see the range, now we wait for, it's a bull market, so I want to be a buyer. We wait for the market now to run lower. Same idea here, except there's one big problem. We want to stay out of the range. Okay, that's the big difference. If we get a range on this, now I've got to make sure my failure pattern, let those sellers to sell off that moving average, my failure and any pullback pattern needs to happen now below that range. Now, I say this almost every evening on this video newsletter. Do not be surprised if you see something like this, where it pulls back and it's too late. You get the failure pattern, but you just simply can't take the pullback. That's why I said that's the big difference. We still want to buy low. We still want to use those classic seller failure off support to be a buyer in a bull market. What we don't want to do, though, is trade inside the range when this is a range-bound market, right? So keep your eyes on that. And don't forget, if it goes sideways for a range, stay out of that range, right? Stay out of that range. Buy it underneath with that failure pattern. Sell it overhead with that crown reversal pattern, right? How do you sell a bull market? Very carefully. You sell it very carefully. That crown reversal, that's the same pattern we just talked about on the S&P and on oil, right? Be a crown reversal buy on oil. be a crown reversal sell on the Nasdaq. Okay, speaking of the market going higher here, what if it runs higher here? What's the plan? Remember those two patterns again? It was what? A 1, 2, 3 breakout. I do not trust buying that high. This could easily go up and dump right back down in. What I will do, though, is wait for the pullback. If they can hold the pullback and go, who cares if you miss the pullback buy? It's not a reliable trade. It's not a reliable trade. You're not missing anything. You're waiting for confirmation. Mark the high, mark the high, mark the low, and now we're looking to be a buyer off of that low. Or it's that strong move up, 1 try for the bears, higher high, 2 try for the bears. You got it. Trap low. Again, let those bears try to sell the highs once. Let those bears try to sell it twice. At that point, now all the bears are roped in, and we're ready to buy right into those stop losses. Once you get that nice strong signal candle, that trap low, most of those bears, they're going to get the heck out of their positions. They're going to throw gasoline on the fire as they become buyers. All right, guys? So now you know what the plan looks like here. Don't forget, 1, strong move down. 2, pull back to the moving average. 3, big jump off of it. Run off that low. Mark that high. Where are we trying to go? We're probably trying to go back to fill that weekend gap. Is that the only reason why I'm selling? No, right? We do not let those gaps. Okay, I don't want to get any emails tomorrow saying, well, I tried to sell it because, there's a gap right there. I don't want to get those emails tomorrow. All right? I don't care there's a gap there. The only way you sell this market is when the market turns bearish. All right, guys? Or do whatever you want, but don't be surprised if that account gets smaller a little bit every day this week. All right, guys? So again, 1, 2, 3 reversal, sell off the high, okay, of that new bear channel, and you know where they're trying to go there for those bears. Wrapping up here now over on the gold. Looking at the gold here, what do we have here happening right now on that yellow metal? Yellow metal, of course, is bearish, as you can see. Yellow metal is bearish into a trading range. What do we know about a bear market into a range? Okay, well, first of all, we know it's a bear market. In a bear market, I want to what? I want to sell at a level of resistance. Okay, I want to sell at resistance. What I'll do is I'm going to take that trading range. I'm going to take that range, multiply it up. I got my sell zones now overhead. I've also got my buy zones underneath here too, so I can be a buyer off that low as well with the correct pattern, of course. Okay, so once we get the range, find my buy zones, find my sell zones, this whole area overhead, that looks like to be a very attractive area of support and resistance. And then how about we have mark up those lows up to those highs? That looks like a great spot there as well. That's a great level of resistance. And don't forget about those expanding triangles. You can see right now I get some trend lines off the highs, trend lines off the lows. You got it. I want to be a seller off the high. I can be a buyer off the low, but I need that. What was the pattern again? That crown reversal pattern, right? Because it's going to be a bear market. You're trying to be a buyer in that bear market. All right, now, a lot of this we've already learned already, but now you can kind of see how we put all this together here. We know we're bearish. We want to be a seller. Do we see a move up above that range? If we do, get those buyers to try to buy off the pullback. It's not a bull market. It's a bear market. Now we know where stops are. We know the odds are not very good on the long side here yet. We can sell into those stops. Wait to sell that pullback. Don't forget, you do not want to be a seller inside that range. Failure pattern, pullback pattern. And again, sometimes the market will just run down and you don't want to take that pullback late in the move, okay? So remember, we're not just trading patterns. We're trading the situation. We're trading the market's context. We can gladly sell above the range, but trying to sell down inside that range, probably not going to be in our best interest, is it? Probably not going to be very good. There's not a lot of sellers there that are willing to sell that low. So as we go higher here, buyer failure into pullback, back down into that range. Again, check out that free course I keep talking about for more examples off real charts and what they look like, right, on the chart. And then, of course, what if we really jumped up? We got that big round number up there. What if it really jumps up to that big round number? It's not a bull market yet, is it? No, it won't be a bull market just yet. What will it be? It'll be a bear market with a bunch of bullish momentum now. What do? We give those bulls 2 tries. We try once, we try twice, and then we can sell into those stops from there. Is this starting to make sense now? How do you know which pattern to use? It's all about momentum. It's all about momentum. A good rule of thumb would be if we go into that first sell zone, that's usually going to be prime time for a failure into pullback combination. If we go up into that secondary zone, then usually that's where momentum starts to become an issue, and now we want to let those buyers try once, buyers try twice, and then sell back down from there. It's all about knowing I want to go short, but during the pullback, that will tell me how to be precise with my entries. Okay, because remember, we want to use small stops, right? If you want to use a small stop loss, you've got to time your entries well. You can't be all loosey-goosey with your entries if you're trying to use a 10, 15, 20 tick small, it's a relatively small stop on a market like gold. Momentum is everything when it comes to a pullback. Okay, don't forget, stay away from the middle here. What if the market runs lower? The market runs lower, how do we buy it? Carefully. 1 try for the bears, 2 try for the bears, and back up from there. Remember, this is a very specific pattern. I always tell my clients, this pattern usually takes twice as long as you think it will to set up, right? A lot of people think about these crown reversals, they're going to happen right away. They're not going to happen right away, okay? That first move down, we'll try once. A couple minutes later, they'll try a second time. This could be 15, 20 minutes just to get the bears to go down, try once, try twice, and then get that signal going back up into that trading range. So wait for it. Don't get blinded by the opportunity here to buy off the level of support, because again, the market's bearish. Okay, crown reversals to buy off of that low. Now, what about a breakout? What's a breakout look like? How about a 1, 2, 3 breakout? Yeah, mark up that high, mark up that high, find that channel, buy the low of that channel. All right, how about a 2 try breakout? Strong move up, real strong. 1 try for the bears, 2 try for the bears, trap low. Okay, our 2 favorite breakout patterns. Where's my objective for the buyers? Objective is back to that 1510, all the way back up to 1510 if they can get it. Where are we trying to go as a seller? As a seller, if this thing takes off to the downside, where is the next objective? I've got 84 and I got 78. Those are our 2 next levels on our radar. So as we try to go lower, again, we're looking for that. Let's get that zoom in a little bit closer. Bingo, right? Again, don't try to sell that first pullback. It could end up right back into that range. 1, 2, 3 breakdown. You got it. Mark that low, find that high, and sell that high, right, on that 1, 2, 3 breakout into a hidden channel pullback. Okay, 1, 2, 3 breakout into a hidden channel pullback, or strong move down, bulls try once, lower low, bulls try twice, trap high, and of course we make that run back down. Again, 84, 78. Again, we've learned these patterns already, just simply applying them to a different market. And guys, don't forget, we do this together every morning, 8 o'clock Eastern time, Monday through Friday. We're going to do it together tomorrow morning, right, as well, right? Tomorrow morning as well. So make sure you come out and join us tomorrow as a new client in our trade room every morning, Monday through Friday, 8 o'clock Eastern time. It's super easy to get registered. If you're on the blog right now, I'll put a big blue button right below the video tonight on the trading blog. If you're on the YouTube channel right now, just go right in the description of the YouTube video, or head to the website at schooloftrade.com, grab the advanced course. There'll be a video there to walk you through how to do it all correctly. And don't forget, you can always call me, and I'd be happy to walk you through the entire process. Don't forget, guys, you can always use that live support tool on the right-hand side of the homepage to keep in touch. Don't forget, post those questions in the comment section below. Hit that thumbs up button for me. Join our mailing list. Subscribe to our channel. But whatever you do, make sure you join me tomorrow morning and every morning in our trade room. We covered a lot here today. I want to see you guys tomorrow morning at the opening bell, and we'll do it all together. Guys and gals, if I don't see you guys tomorrow morning in the trade room, we'll see you guys same time, same place tomorrow night with the next edition of this nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.